Hello everyone and welcome to my channel. Today's video is all about Dow Jones Futures, what they are, how they work, and why they matter so much to traders, investors, and even the global economy. If you've ever woken up early in the morning, checked the news, and heard something like Dow Futures are up 200 points or Dow Futures are pointing to a lower open, but didn't fully understand what that actually means, this video is for you. By the end of this video, you'll understand what Dow Jones Futures actually are, how they differ from the Dow Jones Industrial Average, or simply the Dow, how traders and investors use them, what moves Dow Futures up and down, and whether Dow Futures Trading is right for you. So make sure to watch till the end, because we'll also talk about real-world examples, common mistakes, and practical tips. Let's get started. What is the Dow Jones? Before we talk about Dow Jones Futures, we need to understand what the Dow Jones Industrial Average, or simply the Dow, really is. The Dow Jones Industrial Average is one of the oldest and most well-known stock market indices in the world. It was created in 1896 and tracks 30 large, publicly traded U.S. companies. These companies are often referred to as blue-chip stocks, meaning they are large, well-established, and financially stable. Some examples include companies like Apple, Microsoft, Boeing, Goldman Sachs, Coca-Cola. Unlike the S&P 500, which tracks 500 companies, the Dow only tracks 30, but these companies represent a significant portion of the U.S. economy. Another important thing to know is that the Dow is a price-weighted index, not market cap-weighted. That means stocks with higher share prices have more influence on the index than cheaper stocks, regardless of company size. So when people say the Dow was up 300 points today, they are referring to the combined movement of these 30 stocks. Now that we understand the Dow itself, let's talk about Dow Jones Futures. What are Dow Jones Futures? Dow Jones Futures are financial contracts that allow traders to speculate on where the Dow Jones Industrial Average will be at a future date and time. In simple terms, Dow Futures are a bet on the future direction of the Dow Index. Instead of buying individual stocks, traders use futures to speculate on market direction, hedge existing investments, or react to global news before the stock market opens. Dow Futures trade almost 24 hours a day, 5 days a week, which is why they are so important. While the stock market itself is open only during regular trading hours, futures markets stay active overnight, early mornings, and during global events. This makes Dow Futures one of the earliest indicators of how the market might open. If Dow Futures are sharply higher at 7 a.m., chances are the market may open higher, though nothing is ever guaranteed. How Dow Futures work. Let's break down how Dow Futures actually work. Dow Futures are traded on the Chicago Mercantile Exchange, or CME. There are different contract sizes, but the most popular one is the E-mini Dow Futures, also known by its ticker symbol YM. Key features of Dow Futures. 1. Leverage. Futures allow traders to control a large position with a relatively small amount of capital. This means higher potential profits, but also higher risk. 2. Expiration dates. Dow Futures contracts expire on specific dates, usually every quarter. Traders can close the trade before expiration or roll it over to the next contract. 3. Cash settlement. Dow Futures are settled in cash, not physical delivery of stocks. 4. Long and short positions. You can profit whether the market goes up, going long, or down, going short. This flexibility makes futures very popular among active traders. Why Dow Futures matter. So why does everyone, from news anchors to professional traders, pay so much attention to Dow Futures? 1. Market sentiment indicator. Dow Futures provide a real-time snapshot of market sentiment. They reflect how traders around the world are reacting to earnings reports, economic data, interest rate decisions, geopolitical events. 2. Pre-market direction. Before the stock market opens, Dow Futures help investors gauge whether the market might open higher or lower, how strong the momentum might be. 3. Risk management and hedging. Large institutions use Dow Futures to hedge stock portfolios or reduce risk during volatile periods. 4. Global influence. Since U.S. markets influence global markets, Dow Futures are watched worldwide in Asian markets, European markets, and emerging economies. What moves Dow Futures? Dow Futures don't move randomly. They react to specific factors. 1. Economic data. Key reports like inflation data, jobs numbers, GDP growth can cause sharp moves in Dow Futures. 2. Federal Reserve decisions. Interest rate announcements and Fed speeches often cause major volatility. 3. Corporate earnings. Since the Dow includes large companies, earnings surprises can significantly impact futures. 4. Global news. Wars, elections, trade disputes, and pandemics can all move Dow Futures dramatically. 5. Overnight market activity. Movements in Asian and European markets often influence Dow Futures before the U.S. Open. How traders use Dow Futures. Traders use Dow Futures in different ways. Day traders. Look for short-term price movements. Trade during high volatility. Swing traders. Hold positions for days or weeks. Focus on trends and technical analysis. Institutional traders hedge large portfolios, manage risk during uncertain times. Retail traders speculate on market direction, use futures for diversification. Risks and common mistakes. While Dow Futures can be profitable, they are also risky. Common mistakes: overusing leverage, trading without a plan, ignoring risk management, and emotional trading. Futures are not suitable for everyone, especially beginners without proper education. Conclusion: to sum it all up, Dow Futures are a powerful financial tool that predict market direction, reflect investor sentiment, and offer trading and hedging opportunities. But they also come with high risk, and understanding them is essential before getting involved. If you found this video helpful, hit the like button, subscribe to the channel, and comment below if you'd like a follow-up video on how to trade Dow Futures versus S&P 500 futures, or live market examples. Thanks for watching, and I'll see you in the next video.